Thanks for joining us at xm.com for this Forex Preview video. We'll be having a look at the all-important U.S. inflation report out this week. I'm Cristina Marujos, and joining me today is Mario Hadjikyriacos, Senior Investment Analyst. Markets are eyeing the CPI report on Thursday, Marios, and it's widely anticipated that we will be getting another strong number. One would suggest a high percentage could solidify an aggressive Fed and a double rate hike in March. What do you think we'll see in the numbers, and how could the dollar react?
Hello, Christina. It's definitely going to be a very exciting inflation report. The markets right now are pricing in 5 rate increases in total for this year by the Fed, and they've started to price in a 6th one as well. But because of how strong the US economy has been lately, we also have some bets that the first rate increase in March might be a double one, 50 basis points, right? So the probability for a double rate increase in March is currently 36%, so about 1 in 3. And of course, the US economy has been really strong, right? Consumption has gone through the roof. Economic growth has been strong. The labor market is almost back to full employment. And wages, crucially, have started to fire up. That's really important for the Fed because if wages are moving higher, that means inflation might not cool by itself even after supply chains begin to normalize. The Fed is reading all of this and the markets are reading all of this, and they're thinking the Fed is probably going to have to go aggressive with rate increases. And just how aggressive they will be will really depend on the upcoming inflation data. So in January, the CPI rate is expected to hit 7.30%. Now that would be the highest rate in 4 decades. Are we going to get a positive surprise or a disappointment? I think the risks are more or less balanced, but if I had to choose, I would go for a positive surprise, considering that oil prices rose about 17% during the month, and some other indicators suggest that used car prices also continue to climb. So if we do get a positive surprise, we could see speculation for a double rate increase in March intensify, and that could help the dollar recover some of its recent losses.
Staying on the dollar front, however, it's been gaining on monetary policy divergence, but lately other major central banks have turned hawkish as well, giving a boost to their currencies. Therefore, what is the longer-term outlook for the dollar in an environment of higher rates globally?
That's an excellent question, and I think you've already partially answered it. So if we do get a positive inflation surprise this week, that could help the dollar to recover a little bit. It could raise the chances for a double rate hike in March. Now, having said that, I think that the dollar can remain supported in the near term because of these bets of faster Fed rate increases and because of the volatile environment that we are seeing in stock markets. That's good for the reserve currency. But the overall rally, so in the bigger picture, I think that the uptrend of the dollar may be in its final stage. Why is that? Obviously, the US economy is booming right now, but there's a clear sense that the best days of economic growth are behind us. Government spending, which did all of the heavy lifting during the crisis, that's now fading away. And Fed Chairman Powell even said that fiscal policy is going to become a drag on economic growth this year. Already the signs that we've gotten for this year are that economic growth has been relatively soft in January because of the Omicron wave. The Atlanta Fed GDP Now model suggests that we're barely going to see any growth in the first quarter. So you've got a slowdown coming for the economy, and at the same time, we've got the prospect of inflation peaking relatively soon. So we might get another acceleration in inflation this month, but there are some early signs that supply chains are starting to correct. And after March, the year-over-year comparisons for inflation will become much tougher. So that means the yearly inflation rate could even peak this quarter. And when that happens, I think it's a good chance we're going to see traders pare back some of their bets for shock and awe Fed rate increases. The final leg of why the dollar uptrend might be on its final legs is what you already outlined. Foreign central banks are coming back into the game. So far, we've had the Fed really being the leader in raising interest rates, but lately we are seeing the European Central Bank, for example, signaling that rate increases are coming. So that means we're going from an environment of monetary policy divergence to one of monetary policy convergence, which is typically not a good environment for the dollar. Long story short, if we do see the dollar move higher in the coming weeks, I think that would be a good opportunity for the bulls to take some profits because it might be the last hurrah, let's say, in this uptrend.
Marios, thank you for joining me today, and thank you for watching this Forex Preview here at xm.com.